Poised for Exit is a show for business owners who want to achieve a successful exit based on their own terms. Your business exit will likely be the biggest financial transaction of your life, and for most, you'll have one shot at doing it right. The topics and guests we feature and the stories they share will provide valuable ideas and strategies to improve operations and grow enterprise value so you can achieve the best possible exit outcome. Now here's your host, award-winning certified exit planning advisor, Julie Keys.
Welcome, everyone, to the Poised for Exit podcast show. Our guest today is a partner of a wealth management firm that specializes in working with private company owners, especially in exit planning. He's also a close colleague of mine and the reigning Exit Planner of the Year, which was awarded to him by the Exit Planning Institute at the summit this year. We're going to hear from him and his impressive work with business owners right after these messages. Thinking about selling your business in the next few years? Don't wait to start planning. I've seen too many business owners wait too long and regret it. Freedom Financial Partners are financial advisors who specialize in exit planning for business owners, helping you reduce tax surprises, protect what you've built, and quantify how much you need from the sale. Their proven process helps you think beyond your business so you can move forward with clarity and confidence. The longer you wait, the fewer options you may have. Download your free financial readiness assessment today at ffpforme.com/exit. That's ffpforme.com/exit.
My name is Todd Crow, and I'm the president of the Twin Cities Exit Planning Chapter. If you're a business owner and advisor and want to learn more about the world of exit planning, you're invited to visit the Twin Cities chapter of the Exit Planning Institute. You can expect top-level education delivered by subject matter experts at every monthly meeting. Grow your network and draw from the learning that could be a game changer for your business or your practice. There's no pressure to become a member, so come and see what the buzz is all about. Our meetings are held the second Wednesday of the month, 7:30 to 9 a.m. See the show notes for more information and registration links.
Are you a business owner getting ready to transition? If so, I recommend True North Mergers and Acquisitions as your confidential strategic partner. They understand your business sale isn't just about one buyer and the price, but what you net that counts. In other words, what you get to keep. When you're ready for a higher level of representation that delivers consistent results, contact True North M&A to do the heavy lifting of selling your business. Learn more at tnma.com. That's tnma.com.
Exiting your business is a big deal, both financially and emotionally. I'm John Marquet, Certified Exit Planning Advisor with TrustPoint. We help business owners transition smoothly on their terms. Our focus is on maximizing value, minimizing stress, and giving you confidence in what's next. Whether you're selling or passing the torch, we make the process seamless. Start planning today at trustpointinc.com. That's trustpointinc.com.
Hello, Poised for Exit listeners. We are here today with the one and only Joe Seetoo, who is an advisor and partner with Morton Wealth. Joe, welcome to Poised for Exit.
Hi, Julie. Excited to be with you, and thank you for having me on as a guest.
I'm so glad that you could be with us. We've been talking about this for a while, but you're a busy guy and I'm busy too, and we finally figured it out. Yeah, so here we are. All right, so like I normally do with every guest, is I just kind of like to go back a little ways, unpack a little bit about how you got to where you are today, and just kind of give people an idea, a little bit of context on who Joe is.
Sure. So I got into the wealth management space in the late 90s. I started with a large firm called Sanford Bernstein down in Century City here in Los Angeles. Really cut my teeth in the business there. They were a pretty well-respected large cap value shop and large municipal bond management. So cut my teeth in the business in terms of wealth management, financial planning, was there for several years. But very quickly, I realized that things were changing in the sense that the internet was democratizing how information flowed. One of the things I recognized when I was at Bernstein, it was a great firm, was we were really good at picking value stocks and municipal bond management, but we never said, hey, you should hire another manager who's maybe better than we are at high yield bonds or at private equity or at real estate investing. And so it was, back then it was very much sort of, we put them into our own proprietary products, right? Which is very common for a money management or broker dealer industry. I felt like I wanted to be more in the planning side, sitting on the same side of the table as the client, and started understanding this role of the independent registered investment advisory world. And I actually left with one of the partners in 2000, and we started a boutique shop that I ran for 7 years with him. He was very much sort of a junior senior relationship. Learned a lot with him. During that time, I went ahead and got my CFA as opposed to going on and doing an MBA. I really wasn't in a position I still had to work. And so the CFA route just sort of felt like it was appropriate for me very early on in my career. And yeah, that's how I got started in the business, and then moved over to Morton in 2007.
And you're an owner as well.
Yeah, so
Mm-hmm.
becoming an owner in 2014. So from 2007 to 2014, joined a bigger registered investment advisory firm, Morton Wealth, when I was looking at other firms that I could sort of take and grow my own career. Morton was doing a lot in the alternative investment arena, which I had done in my prior life. Really believe that is something that wealthy families should consider as part of the wealth management strategy. So joined the firm in 2007. What's interesting is the four founders had an exit the year before to a bank, and then the 2008 crisis hit. We were always a very profitable asset for the bank, but that banking entity ended up getting recapitalized by a private equity group and sold to Union Bank. And we actually had the opportunity to essentially extract ourselves in late 2013, early 2014, and sort of be masters of our own destiny, so to speak. And that allowed myself, our current CEO, our current CIO, to the sort of the second generation to become owners. And since then, we have scaled the business from what was about $1.2 billion or so, we think, at that time, to now, I think we just crossed $3.5 billion. We've institutionalized the business, so it's less sort of an income play for the existing owners, really more of like we talk about in EPI and the exit planning community, focusing on building value, not just focusing on income. So 65 teammates, 14 partners, and like I said, about $3.5 billion in assets now.
Wow. So yeah, you've really grown a ton. We were talking about that before the show. When we first met, I believe it was right after you acquired your SEPA and you jumped into
Yes.
my course, that online course that I started so long ago. Yeah. So
No,
cool.
that course again really helped me in so many ways. But yeah,
Yeah,
yeah, you've seen the evolution since 2018.
for sure. And I would just say too that knowing how many people are out there who have acquired the SEPA credential, you guys have really taken it seriously and implemented into your practice in a way that is rather unique.
Yeah, I like to think so. I mean, it was,
Yes,
as you know, it's the jump from the body of knowledge to starting to implement it into a practice management.
exactly. Right. Right.
Challenging. Yeah. And
Very
so
challenging.
we
While you're still running your primary practice too.
yeah, well, we've
Mhm.
what's been great is as we've grown and as I've mentored other now partners or others in the firm is I've been able to shift clients that really still need a lot of great handholding, but candidly, if I'm focusing on strategic initiatives like the Strategist, which is what Mike and I, Rudo, have built to be a flat fee offering for exit planning for owners, that we have to have great teammates that we can take care of our clients if we're focused on these strategic initiatives.
So let's talk about that. Let's talk about the strategist offering. That's something that you guys offer in the firm, and it sounds like it's relatively customized as well.
Yeah, it is. It's really meant to be where I liken us to a general contractor. We're working with an owner. When I think of a general contractor, they may not be the ones necessarily hammering the nails, but they offer the structure to an owner of sort of how to think about exit readiness, whether it's a third-party sale, a family succession, an internal transfer, whatever it
Hmm.
might be. It's resources, which is, I think, one of the biggest things that we know in exit planning is it's a team sport, right? I'll share
Hmm.
a really quick story right now. I'm working with an owner in Texas, and it's 4 owners, 2 couples. One of the key things we identified is that neither couple had an estate plan, and these are folks in their 50s and 60s. Pretty successful business owners, but they're just focused on running their business. And
Right.
so through our network, sourcing a couple of estate attorneys for them to interview very early on was one of the critical things that we're, again, bringing to the table. So resources are, I think, a lot of the value add that
Yeah.
you do it in your practice where if an owner has to take time away from running their business to find a great lawyer, to find a great business coach, to find a financial advisor, to find an estate attorney, it's to find
Yeah.
a great CPA, it's a big distraction. And so
Huge.
alleviating that pressure is, and these are folks that we have vetted, we've either worked with before, or we can take the time to ask the right questions to help tease out, are they a good fit for our owner clients. And then lastly, I'd say the big thing that I think the strategist offers as well is the accountability piece, where now the owner is accountable to a set of initiatives, getting their personal financial plan ready, engaging that estate attorney, like I was just talking about, to start to march them towards exit readiness, or hiring a great business coach like you, who maybe goes into the business to, set up the KPIs, to, help
Mm-hmm.
the value that is going to close the wealth gap. Yeah.
Mm-hmm. And you're still quarterbacking the whole process, right? You're still leading the process. Like you said, you're making these introductions. And at the same time, are you also the go-to primarily for financial advisory services, planning, all those things
Yeah.
for most
So
of your clients?
back, the offering is meant to be very flexible. So
Mm-hmm.
retain sort of as the exit planner, then yes, I would say we're the go-to. And again, oftentimes we're bringing in other resources. There are times where we're brought in because there's already somebody other than the owner leading the sort of running point as that general contractor. And so we can simply plug in as the
Sure.
financial planner, and I
Mm-hmm.
call it wearing our subcontractor hat there. But even in that case, or in the first case where we are the exit planner, usually what I'll do is I'll pull in one of my partners or one of my teammates to really be the point person with me on the financial planning. So that way I'm in the loop on it, but I can have them
Okay.
delegating almost that piece of it to our team. And then either Mike or I are typically, again, acting as the general contractor. And then usually it's keeping the owner accountable, sourcing the other advisors, and really coordinating the communication that easily falls through the cracks, and just keeping those initiatives moving forward
Mm-hmm.
on a monthly or every 2 week basis, so that we're all marching in the same direction.
Yeah, and that's a beautiful thing. I mean, that's how transactions actually transact,
Yeah.
right? When communication is kept up and people know what's going on and everything's in real time.
Yeah.
For sure. So, aside from the strategist offering, what other services does Morton Wealth offer to their clients?
Yeah. So our bread and butter is financial planning and asset management. So,
Mm-hmm.
which obviously we're using for business owners, but we do that for our clients who are looking just to retire,
Mm-hmm.
going through a divorce, maybe have an inheritance. And so financial planning for us is really the first step in the process. And it's very detailed. So it's literally copies of tax returns, insurance policies, estate documents, social
Mm-hmm.
security statements. So it's literally, I talk about it really about, you obviously have the numbers, but it's really more life road mapping, where they
Mm-hmm.
are today, and then what are the things they want to see in their life that determine success for them or determine fulfillment. Donating to that charity, spending time with their kids, funding their grandkids' education, going on those family vacations. Then also looking at the downside, which is, and this is where life happens, right? God forbid
Mm-hmm.
someone passes away. Expenses are running higher than expected. We have a long-term care event. And so those are the stress tests we're building into the plan so that we can understand a client's wherewithal to achieve those goals that they have, or to protect themselves in an unforeseen event. Once we have a lay of the land, not only from a cash flow perspective, but from a structure perspective of their, it's a very basic estate plan, or do they have a more complicated estate plan?
Mm-hmm.
We're in a much better position to talk about risk management. Are they self-insuring these risks? Or do we need to find someone who's, again, an expert in life insurance or long-term care, or even property casualty, which has been a huge thing in California with
Yes.
folks losing homes, is
Right.
those things being addressed? And oftentimes there's not, right? There
Yeah.
are little gaps that can relatively easily be addressed if people are looking at it. Now we're in a much better position to make those decisions on an informed basis, more thoughtfully,
Mm-hmm.
coupled with aligning their investment strategy, not just by throwing darts at a dartboard, of like, hey, I want to invest in this because it's the latest thing, but really in alignment because we know the required rate of return to meet what their life objectives are. And we can position the portfolio to be in alignment with what, again, those life goals are. So now we've created real alignment.
Totally. Like you said, there are gaps in the different aspects of readiness, right? I mean, think about just insurance, for instance, like you mentioned with property insurance. I just had this conversation with a client the other day, and they haven't looked at it in years. Like, they don't even know, do they have enough coverage? Do they have the right coverage? All those things. And coming from like an exit planning perspective, which obviously that's what we're talking about here. You mentioned the work that you're doing and helping the business owner actually dial in and understand, right? So knowing the number and how important that is. Let's speak to that because, man, I mean, that's a murky area that many business owners just can't answer the question because they really haven't thought about it in the right way.
Yeah, I think it's one of the most critical things that come out of our work in the strategist offering, which is, at the end of the day, how can an owner ultimately? I mean, I'll share another example. I had a situation at the end of last year, beginning of this year, where I was referred in by a business coach. He helped increase the value of the business substantially, but the client had already signed the deal. They were already in due diligence. They already had
Oh,
terms of
oh,
the deal, and I got a call from the client, from the owner saying, "I'm going to refer you this client. They need to get a financial plan in place like right away." I mean, by the way, it is not that uncommon,
I
right?
know.
Unsolicited offers come out of the blue.
Yes.
Owners think like, okay, this is my chance to
Mm,
exit. I'm burnt out, or I don't know what else is out there, and they're just uninformed.
yes.
So we're trying to get ahead of that and work with owners again, ideally before those things occur, so that we can be in a much better position to dictate the terms, right, with the attorney, with the M&A advisor that really the client feels comfortable with, they're confident with. That, as you and I know, if an earnout is part of the deal, who knows if that's actually going to materialize, right? Are they going to
Right.
be okay net after tax with the cash that they get at closing?
Right.
So until you tease that out and actually put pen to paper, and then actually even it could sound like a lot, but then you look at inflation 5 years down the road, 10 years down the road, coupled with a health event, right?
Hmm.
They may not be all that they thought it was, and they're in a much more compromised position.
Well, and so many too of their other advisors aren't really having conversations with them outside of their prospective discipline. And so taking a holistic approach like you are and doing what you can to mitigate risk, you're already adding value to the business just by doing that,
Yeah,
you know?
I agree. Well, and I
Yeah.
think the exercise itself again, it lends itself to naturally looking at things globally, because
Hmm.
we're literally extracting, the value of the business, their real estate, their, what are they doing with their kids or grandkids? What's their entire world look like? And let's get it in front of them and start to look at what's coming down the line.
Hmm. What's life 2.0, I like to say.
Yeah, what's life 2? Yeah, well, and that gets
Yeah.
into the third leg of the stool, right? For
Right.
exit,
Right.
which
Right.
is who are you when you're no longer the CEO of the business?
Yes.
Um,
I imagine you guys have really good conversations around that too.
we do, yeah,
And
and
some planning. Yeah.
it is. I feel blessed that one of the benefits and one of the reasons why I was even drawn to this practice around wealth management, but even more so even with exit planning, is there are very few professions where over an extended period of time you get a window into a client's life. Good things that happen, things that aren't necessarily as pleasant, death,
Yeah.
divorce,
Hmm.
loss of kids. But then you also get to see great things that happen, right? Someone's able to retirement, they're able to exit that business and go on and pivot to a special project. I have a client right now that actually he exited his business, he knew his number, and he feels a really strong calling to serve his community, really in a more of a civic capacity, and with kind of what's going on in the state of the world right now, like that's where he wants to spend his time and energy. He's getting a tremendous amount of fulfillment. He's still reasonably young. He's in his early 50s. Being able to do that now, right, when he doesn't have to worry about, hey, I can take a couple years off. I'm financially okay. And I can go back to work and start another business at some point in the future if I want. But those freedom points only happen for owners, I think, who actually do the right kind of planning. Otherwise, it's too much of a shotgun approach.
Totally. Well, and without the right advice and trying to DIY, that outside perspective, I think, is the greatest value, because generally when they're trying to do the DIY thing, then they get their foot off the gas with the business,
Right.
right? And that's never a good thing. Yeah.
The business
Um,
starts to slide.
so your investment philosophy and approach, let's just talk
Yeah.
about that, because I know that's pretty unique.
Yeah, that's a great point. Yeah, so I liken us to what I call the sort of endowment model, where stocks and bonds are great asset classes and they're important, but it's a little like only having two legs under the table, right? One of those goes out, that table is just not as stable.
Yeah,
So we're big proponents of investing in real estate, in gold, in loans that are secured by assets, hard assets like real
sure.
estate or inventories, machinery, equipment, such that we really want to build what I would say is like a bulletproof or all-weather portfolio, right?
Mm.
This gives clients much greater peace of mind. They have the ability to live their lives sort of on their terms and conditions. They're not reactive. So peppering in what we would call alternative investments, or investments that really don't move in lockstep with the stock and the bond market, is something Morton's passionate about. It's something we've been doing since the 1980s. And I think it's something we're really good at. Our research team is incredibly good at sourcing opportunities and kicking the tires, really doing the due diligence, not only in the investment opportunity itself, but also the operations of the business. Because you're investing with a private manager typically. And so you have to be able to assess risk in terms of how they're running their organization, their cash controls, who are the other parties that are involved, their auditor, their banker, their attorneys, things of that nature. So it's a great opportunity for us to actually invest our own money shoulder to shoulder in
Yes.
these opportunities. And so we start first really with a risk assessment, number one, and then we're trying to understand, does the return opportunity justify the kind of risk that we're taking?
So that probably expands your network in terms of professionals that are outside your circle of expertise, right? So you refer back and forth to each other. You've got some allegiances going on, it sounds like.
Yeah, there's certainly definitely key relationships that our team trusts, that are brought in on.
So
There's a
smart.
great manager that it's an asset-backed lender that we've done a lot of business with over the last 7-8 years. They were actually referred to us by a hedge fund manager that we used to use. They also run an equity strategy, but they think similarly in terms of the world like we do, tend to be a little more defensive, a little more risk averse. And so I know Megan, our chief investment officer, and their team, they kick the tires on just different ideas from time to time. And hey, what do you think about this fund? We're looking at it, and they send us ideas. And so to your point, having that expanded network certainly helps.
Well, and it benefits the client in such a big way, right? Because there's no tunnel vision involved here.
Yeah, no, we as a
Yeah.
fiduciaries, we really want to expand our horizons to be open to looking at different opportunity sets. Now, with that said, we have I think in 1 year we looked at 80 opportunities and we moved forward to like 4. So
Sure.
it's a wide filter to capture the opportunity set, but ultimately what gets through is a pretty narrow select few.
Yeah, which is probably good, right?
Yeah.
Too much to manage otherwise, yeah.
Oh, yeah.
So tell me about your toolkit you guys created.
Yeah. I wish I had a copy around here, but essentially what we did was we wanted to think about, I think there's a lot of, like Walking to Destiny is a great book and I love it. But we wanted to try and take something that was more, one is involving our local community, right? Because we had started the Conejo Valley chapter and, I know you started a chapter local to you. And so the idea was, how can we create something that's a little bit timeless, that shows that we get areas of expertise, and the toolkit really is from start to finish, like valuation to then almost like a roadmap of like what an owner would go through. It's taking the filter of the value acceleration methodology, but like then putting it into practice practically. So we have 17 or 18 articles that we co-authored with various experts in the exit planning space. So valuation, improvements to the business, estate planning, income replacement, deal structure, due diligence, you're updating your financials, culture,
Mm,
estate planning. It literally runs the gamut. What the owner needs to be thinking about, and then actually at the point of the exit itself, like pros and cons of a third party sale, family succession, an ESOP, and then actually at the very end, the last one was written by two coaches that talk about the psychology of the exit, the personal experience after you're no longer the owner. So it really runs the gamut from start to finish. And it's meant to be, again, sort of a roadmap or a toolkit that an owner could look at and pick up, I think, various insights in those different domains, depending on where they're at in the journey, or if they simply want to just become more educated.
that sounds really, really useful. And I
Yeah,
think, it brings, like you said, it's a value add. It brings value to the client and helps them, like you said, to get educated because they make better decisions that way,
100%.
right? Yeah. So last question. 2026, what's your crystal ball telling you?
In terms of our business, the
Your
world.
business growth, your clients, like what are you anticipating? Like how's it going to shake out?
I mean, look, I'll start with the business.
Mm-hmm.
One thing I haven't talked about is one other offering that we have. We have the traditional wealth management, we have the strategist for business owners. One other offering we have is called Modern, which is essentially an offering for the sort of high income earners, not rich yet, the Henrys.
Mm-hmm.
And that segment of the business is growing quite fast. It's a much broader audience than owners are very specific part of our practice. But we're definitely getting more modern clients built into
Mm-hmm.
that. I do expect Mike and I, who is the other exit planner here at my firm, him and I are getting more sort of in front of more opportunities on a very regular basis. So I think it's going to be just continuing to build the brands. We
Mm-hmm.
just had our 4th annual Morton Symposium. We had over 400 people at it at the Westlake Village Inn. So the chances are, if we do that next year, it'll be even bigger. And if we have reasonably good capital markets, I think we'll be pushing up on close to 4 billion in assets. So
Awesome.
probably adding more bodies. So from the business standpoint, if the markets are reasonably okay, I think we'll continue to just the trajectory that we're on. So, but that's a
I'm
big.
sure. Well, and you guys run a good, solid strategic growth plan too, right? So you're not just like,
Yeah.
yeah, and that just makes all the difference, as you know, because of course you've got your primary practice and your discipline that you know well and know best, but at the same time you're also business owners, and so
Yeah.
you're operating it like a business, not just a practice.
Yeah, no, I mean, we're talking about it earlier before we started, and that's one thing I feel very fortunate that as I became an owner, and my partners, we really, I think, implemented a lot of the things that we talk about in Exit Planning Institute around institutionalizing the business. We've spent a lot of time investing in our human capital, into our structure, into our marketing, really making the business more valuable so that we have a leadership team that's, I think, 12 or 13 of us that meet quarterly. We have different KPIs for each one of those teammates presents them during those 1 or 2 day retreats. And then it all goes into a system where we're showing it across the firm and holding each other accountable. So we really do like to think we're sort of eating what we're cooking, so to speak, or that what we're espousing
Yeah.
the clients to do, that we're doing it ourselves.
I think that's where the magic is. I really do. If we're doing it ourselves, it's so much easier for us to advise our clients to do the same.
Yeah, 100%.
Mm-hmm.
You can say it with
Mm-hmm.
much more conviction, and you have real stories that you can share. Not that we're doing everything perfect. We've had plenty of growing pains over the years, but
Oh
that's
yeah.
natural for any growing business.
Well, this has been awesome. I'm so glad I could have you on the show, Joe. Thank you for sharing your wisdom and all the cool things that you're doing at Morton Wealth. I'm just really impressed.
Julie, thank you for having me on. This was terrific.
You're so welcome. And thanks to our listeners for joining us. Please share this episode. We really, really appreciate the growth that this show has experienced, especially over the last year. Obviously, the content has been valuable. And so please do share. And also, please support our sponsors. We appreciate it. We'll talk to you soon.